everyone, welcome back. So today we wanted to share an experience of pre-IPO investments. If you have any questions, suggestions, comments, please feel free to leave them down below. If you like videos like this, don't forget to subscribe to our channel. So here we have Sandy.
Yeah, my name is Sandy. I'm the insurance and private equity advisor. And welcome to my channel, Real Money, Real Talk, where we talk anything about money topics from all the way to personal finance to different type of investment or even venture to cryptocurrency talk. So if you like our channels, make sure to click the bell and subscribe to our channel.
So I am Gina and I am the host today, and let's get this video started. So as maybe a beginner investor, you might have heard of the term pre-IPO, but not many people know how to invest or get involved in one of these. So Sandy here can share an experience about how some of her clients can get involved in a pre-IPO venture.
Yeah, so what part of my investment offer to BC Canada residents is pre-IPO is one of them. So by myself also have invested quite a few different pre-IPOs in the past, which I'm going to share with you my journey, how these pre-IPO goes, as well as different ways of investing in pre-IPO to kind of share you the different channel and different dealer in terms of experience, so that you are aware that you're not making mistakes investing the wrong investment.
Can you tell us about some of your past experience or what pre-IPOs you were involved with in the last year?
So I have done 3 pre-IPOs specifically from Canadian companies where they launch to own the Toronto Exchange stocks. And I do still have one more that's still awaiting to be listed on the TSX. And I also have done about 4 different American on the NASDAQ, and then 2 already listed on the NASDAQ currently at this point. So I'm going to share with you the journeys from all these previous ones that I have done for myself as well as for my clients as well. So what we're going to do is, first of all, I think you need to understand what pre-IPO really is. Now, from company who want to be listed on the public market, they can go IPO method, or they can go under the direct listing. These 2 differences are basically one requires underwriting, the other does not require underwriting. From investors' point of view, it won't matter too much, because at the end of the day, the end goal for investor is to make a profit from what you originally put in the money. So far I have done 2 different ways. One is directly dealing with the company who is offering the shares, and where they will actually give you a certificate directly from their company, and then you will need to deposit that certificate to a bank account, visiting at a branch with an advisor that they will fill out quite a bit lengthy process in order to deposit that physical certificate. So that'll be one way of doing it. I used to have that one because the previously used to deal with more of the Canadian sort of the startup company. So one of them is actually a blockchain company where I was able to invest pre-IPO roughly around 3 years ago, and I sold at a profit about 7,000 after it became a public one after the unlock period. And to up to date, to kind of let you know the growth from that stock, if I will hold it just a little bit longer, it will go double, which is actually 100% gain at this point. But that's why the profits, I'm pretty happy. And then now my personal opinion is Canadian companies tend to be a bit more slower compared to the American public market. So if I would, this is my personal opinion, I would recommend if you want to do pre-IPO, the safer side is actually to look into bigger company and list it on the American side rather than on the TSX side, due to the volume is a lot lower compared to the NASDAQ or any other platforms from USA. So that was my experience from one which is able to get the share directly from its company. The other way of doing it is actually dealing with the dealer, where you have investment company, they will go after a secondary market. That way, what they will do is they will create a limited partnership and then put all the shares into a pool and then distribute to the investor, where they hold the entire shares until the company become a public. So how do they actually do that? So these companies, what they would do is they actually go after secondary markets. What is a secondary market? Secondary markets are companies will go after, for example, like formal employees, where they need to sell their shares because once they leave, they only have a certain period of time, either they rotate or actually sell it privately when the company is still not public yet. So investment company will go after those ones, try to negotiate with these former workers, and then buy the shares from their hand privately, and then hold them and wait until the company becomes stock market or listed on the stock market. And then the other secondary is you could also have employees who are facing maybe financial crisis. So we call them as a distressed seller. It could be individual. It could be also from financial institution perspective, where they can no longer able to hold a lot longer for that particular type of investment until you're able to trade publicly on the stock market. So those companies once they negotiate, they may have a pool of different price range where they target at the best price. So I'm going to use example. Okay, so for AirBNB, we were able to get in after the dealer fees, everything, as an average of $58 per share, and this is before so this is after the split, right? So before the split will be at the dollars of $150 per share. Okay, so right now, accordingly to a bit more easier for you to look at the stock, we got in the price at dollars, which is $58 a share. Okay, right now the AirBNB currently at this point value at $151 a share at this moment. So the clients, what happened is, in terms of once they profit, we will be transferring out from them from limit partnership outside, so they will get the one tax from that one, and they will hold the share on the stock where their platform really is, and then they may have an average about, let's say, 147. But however, their dollar amount where they initially put in, I'll give you the actual concrete number. So the clients and myself who put in, let's say, for example, $50,000 USD into AirBNB at the time for $58 a share, when they exit out of that project, and then have the shares on the platform, their $50,000 is now actually about $126,000. So when we transfer the money to our clients, the money that they receive is $126,000 in USD. So it grow definitely more than double, right? As you can see. And right now, some of my clients, including myself, I'm still holding the MB at this point. Now MB is going up further, so you actually see about additional 5% gain at this point. However, you don't get tax yet on the second time, which is the additional gain after you exit out the project. You only get tax for the additional gains at the time of you selling that share. So that's the main differences on the tax perspective. If you are able to directly invest the pre-IPO with the company itself, you will not experiencing the first tax. You can actually hold that shares for a lot longer and then sell it whenever you actually think it's appropriate price for you, and then the tax will be accordingly at the time of dispose. Now, if you go through the dealer where they actually bargain all the prices for you, and then actually invest in the LP route, and you will get disposed of first time once you exit out the project, once you exit out the LP, and then further tax from there after you sell your share on the public market. So those are the experience that I have.
So a question, Are we allowed to get engaged in these programs using the TFSA?
That's a very good question. So because it's a private market, so these ones we buy off like complete private companies, so they are not eligible at this point for TFSA or RSP, and I don't think they will really be able to eligible for registered accounts at this point. The only private equity that you are able to participating in registered accounts is only if they listed on as exempt market on the dealer side, where they actually create as kind of like trust fund or like kind of mutual fund pool type of ish, that being approval by the register, which is by the government, be approval by the government, that you're able to do that. For private share like this, unfortunately, you won't be able to shelter that money into registered account. So it will be taxed as a capital gain.
I see. So you did mention a little bit about, risk involving in pre-IPO investments. This is probably the time frame it takes a company to get, onto a stock exchange. So, you can have your money sitting there for a period of time, which could be an opportunity cost. Can you just explain a little bit more about the risk involved?
Absolutely. So my personal experience is when it comes with a pre-IPO, it is a very high risk type of investment. So typically it does have a requirement that you need to have certain asset that before you can actually even participate in this type of investment, which I've mentioned in my previous video before I talk about what accredited investor really is. Pre-IPO does need to be qualified as accredited investor. What that means, you need to have about 1 million financial assets or 5 million worth of net worth, or you have 200,000 annual income annually, or combined with 300,000 combined with the spouse. In terms of your income. So it does require certain qualification in order to be able to participate into this type of vehicle. One thing I think what you need to know about the pre-IPO, where the risks really are, is the time, right? And also the risk where the company may actually continue to delay the IPO process, or it could be they never become a public market. So could be a SpaceX. It's very popular. We actually hold a little bit shares on that one, but we don't know when it's going to be IPO at all. Right? It could be 20 years later, 30 years, or it could be never become a public company. So those are the questions that you need to ask yourself. Are you investing in a company that you truly believe that it's definitely well worth your time, and also your the value that you're looking at in terms of also the growth as well too. We typically aimed at companies who should be targeted at between I would say 3 to 4 years at the very most. Most of the time should be under 3 years is what we target at. Anything longer than that one, we don't think it's actually a good investment for our investors at this point, just because there's a lot of unknown factors where company could change the mission, or maybe their CEO, directors could change, and things could happen, and then that will directly actually impact the growth of the company as well as the value of the company as well. Okay, so a few things. Okay, first of all, you want to make sure that the company you're investing is well known, so it will hold the market at that price after the unlock period. And the second one is you want to make sure that the company is target become a public market, listed on the public market within 3 years. And you also want to make sure that it has a good volume as well too, which is typically listed on the USA market. Preferably the technology sector, NASDAQ, has a lot of volumes. So these are the 3 targets that you want to kind of make a note when you want to invest in the pre-IPO. The risk, what you need to know is, first is the time, and the second thing is it is a lot less liquid in terms of withdrawal. So if you need to actually get out of that fund, you need to either sell privately with some fees maybe involved with lawyers, and also need to be aware that it cannot be emergency fund where you're planning to use that money to buy a home. So you need to actually plan out a good about 5 years that you will not touch that money at all.
Mm-hmm. So just let me get this a little straight, is that if a company doesn't get on the stock exchange and it just remains private all this time. In order for me to exit out of this program, I will need to privately sell my shares to an accredited investor.
That's right. Yeah.
Okay, so I hope you have learned something from this video and gained a little bit more information on how to get involved in pre-IPO trading or programs. If you like this video, please like and subscribe our channel.
I look every comment myself, and that's why I reply to every comment. So if you have any questions, definitely do leave it on the below sections. I'm also gonna be including the link below. If you're BC resident, you're looking for pre-IPO and want to get a little bit more information, you can subscribe our newsletter. If you're from USA, we also offer to USA residents as well too for those pre-IPO opportunities. Once again, click the link below inside the descriptions that you can be on the newsletter on the list to be able to get a notification for our IPO offering.
So I hope you enjoyed this video and we will see you next week.